Good morning. It's Harvey Jackson. Just going to get through a little bit of news on the we'll cover the futures focus report, the most current kind of trades, what we're looking at, basically the bias of the market that we're seeing at the moment, and just government shutdown, a little bit of tariff stuff, of course. So the futures focus report, canola, first topic. You can see here that um, we're just slightly ahead of pace of last year for crush capacity utilization. So we're using 86.6% of capacity utilization. A year ago was 88, with a little bit more capacity online. Still pointing towards a 12 to 12.5 million metric ton crush, as long as we can keep our relationships with other countries as steady as they are. And here, this is probably the other thing that you need. This is the export side, and we are 57.4% behind pace of last year, which is very impactful. Not bullish at all. As you can see, that we're suggesting that we'd be in a bearish camp, and some of the other commodities. Like the veg oils are showing signs of weakness here as well. Um, Still wanting to hold on to some sort of short position or keep selling into this market as the pressure is still on. I think December 4th is going to be a day that we're going to see the numbers. So we've got a whole month before we get to that. Here's your spring wheat. We are 14% ahead of pace on the exports, and exports matter more than anything there. But we are looking for this bounce to give us a little bit of upside potential here as well. So what does that look like? We are going long for the growers that want to on wheat. I know I want to go long on wheat, but ours are in the brokerage, but it's been very difficult to be able to say, hey, on this long-term downward trend, which we've got punished many times, that we're going to go long, and we're not going long for a big gain because there's not a big wholesale shift in this market. So this is your Kansas, and this is your mini wheat here, of course. So if we quick look at what soybean trade, we're looking at short futures when the market gets up to 11.15, and on the corn, seems we're looking to go long corn if the market gets back to 433. So it's basically going to have to break through the current downward trend line. Government shutdown. So Senate is to get back in action Monday afternoon, and as it stands right now, I think we're 34 days, so the second longest. 35 is the record when the previous Trump administration battled to get funding. I played both sides of this here, but government that has been cutting spending and looking for ways to protect and increase productivity in their country, definitely knows how to create a deficit as well. Chinese buyers purchased Brazilian soybeans as prices ease over U.S. China trade. So the basis levels have definitely showed improvement for the Brazilian to get picked up. So the buyers are booked 11 cargoes or 10 cargoes of Brazilian beans for December. So that's 600,000 tons and another 600,000 tons for the March-July timeline. And Brazil is now cheaper than the U.S. Gulf. The buyers are taking this opportunity to book cargoes, and that is all in turn because of the arrangement for the soybeans to get bought from the U.S. With the U.S.-China arrangement there for buying soybeans. Here's just a quick look at what the current tariffs are, and you can see here China, European Union, Mexico all have pretty high tariffs, and then Canada has it says 35% here, but it's not quite as impactful when it looks as for the amount of trade deficits, right? So trade deficits have changed substantially. Quick look at the weather. You can see that there is some moisture that's going to hit Alberta, Manitoba, and I'm going to be over in the Red Deer agri-trade. So traveling and maybe some of that weather getting there, of course. You can see this band of showers going across Great Lakes. And if we have a look at what that weather trading in the U.S. or U.S.-Canada border is, basically snow. Here's the snow buildup. You can see it goes a band across here. And then if you get more time in here, now it's forecast for, it's only a forecast, but you can see that you get up to 16 inches there. or 16 centimeters, I should say. Temperatures are cooling down here as well. You can see we're getting into minuses, and here's minus 15, I think, at one point, minus 17. So we're getting into winter here for sure. Here's just a precipitation anomaly, and I'm going to compare the precipitation anomaly for the next 10 days, and you see some drier in there. Now, is that just going to allow the planting to happen at a good pace? It's already at a pace, but the other one that I'm going to pay attention a bit to is your temperature anomalies, and there is nothing hot, and the heat is the one that you need to pay attention to, whether it's going to cause some issues. So here's the market values. Canola trading 636, so down, just basically flat, zero point 0.2 or 20 cents a ton down. Rapeseed is 478, down, trading down 250. Soybean oil is 48.55, down 0.13 cents of a pound. That's breaking through some of the support line. Palm oil continues to follow. So if you got this complex falling, it's going to put some pressure on the canola for sure, and the rapeseed. Crude oil just trading just shy of $61 a barrel. Soybeans now trading at 10.43, just up a penny and a half. And your wheats are all trading a little bit higher. So spring wheat is trading 4, and your hard red winter is 4, and then your Chicago wheat is actually at 7 cents, 7.5 cents higher. There we are with the January, quoting January, not November anymore, as November's off the board and into delivery now. Chicago futures, here we are. January or November of 26 futures pulled off quite a bit here off the higher values that we've seen last week, and the same thing's happening with your Kansas or your European rapeseed, and your European rapeseed is currently trading 136 to 137, so $136 more expensive than the Canadian canola and Canadian dollars. Soybean oil futures. This is the line that I was looking at for a trend line. If it breaks through there, we could probably see areas down in the mid 40s. And yet here we are. Soybean futures is still with their uptrend that we've seen for all of last week and the week before. Same thing with meal futures. It's taken off. But the oil hasn't done anything. Your crude palm oil is continuing to fall off, and that's not supporting canola at all at this point. Canadian dollar fall, since Wednesday has continued lower when they had their rate decrease. U.S. dollar is actually getting towards a 200-day moving average, and getting to highs that we've seen back in August, which puts pressure on commodity values, especially wheat and soybeans and stuff and corn. Here's your short-term wheat chart, and then if you kind of look back and you put it on over the last high that we've seen over the last number of years, a breakout above that line would be somewhat bullish, or as well, changing trends basically, if those lines are drawn in the right place. Now here's your Kansas wheat, short-term line drawn in here right at that 100-day moving average and the 200-day up here. So if you look at the Kansas wheat, just longer term, you've got multiple peaks that you did pick, and that's where we're kind of trading right at the moment. So if you look at Chicago wheat, nice move up here. Look for a potential move up to those trend lines and your 200-day moving average. And just a farther look back, where those lines are and how they got derived here. Milling wheat right at this trend line going down as well, but a long ways before we get to that 200-day moving average. Corn just pulled off a little bit from its highs that we've seen earlier on, or mid last week. Looks like we could be trying to retest that. We'll see. And that's all I have for you today.